Have you ever wondered why some of the world's largest fund managers are turning their attention to Canadian apartment real estate investment trusts, even when the sector seems to be out of favor? Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. Let's get right to it. For almost a year, the real estate investment trust market, particularly those focused on rental properties, has been under scrutiny. Investors anticipated a property bubble burst that never quite materialized. However, recent developments suggest a renewed interest in these assets. According to Andrew Willis from the Globe and Mail, some of the largest fund managers globally are now buying up these previously out-of-favor real estate investment trusts. This includes a significant move by Singapore's sovereign wealth fund, GIC, which teamed up with Mike McGahan of InterRent Real Estate Investment Trust to bid $2 billion for the Ottawa-based owner of 12,000 apartment units nationwide. The federal government's decision last October to reduce immigration, foreign students, and temporary workers initially cast a shadow over the rental market, causing a dip in real estate investment trust values. However, contrary to fears, occupancy rates have remained high, and rents continue to increase. For instance, InterRent's apartments saw occupancy rise slightly over the past year, with 96.8% of units filled by the end of March, and the average rent increased by 6.2% year over year. Despite these positive indicators, apartment-focused real estate investment trusts continued to trade at significant discounts to their net asset value. This discrepancy prompted activist campaigns like the one from Anson Funds, which led to the recent takeover bid for InterRent. Analysts at CIBC Capital Markets suggest that this transaction could spark a reevaluation of the entire Canadian multifamily real estate investment trust market, encouraging investors to reconsider their positions. Furthermore, the multifamily real estate investment trust sector is viewed as a safe harbor during economic downturns. Historical data indicates that rental property owners tend to outperform in weak economies, a sentiment echoed by analysts at Bank of Nova Scotia. As global investors like GIC and Blackstone Inc. continue to acquire Canadian rental properties, it signals confidence in the sector's resilience and potential for growth. In summary, while fears initially drove down the value of rental real estate investment trusts, the market's fundamentals remain strong. The actions of major investors and positive occupancy and rent trends suggest that this sector could be undervalued, offering opportunities for astute investors. As always, it's essential to keep an eye on these developments and consider how they might impact your investment strategies. In other news, FCP, a privately held real estate investment company, has successfully closed on a $13.25 million preferred equity investment. This transaction is part of their structured investments platform and is aimed at financing the Mosaic Pooler, a 333-unit Class A multifamily development in the vibrant Savannah submarket of Pooler, Georgia. As reported by FCP, this investment highlights their strategic expansion in Georgia, capitalizing on the strong demand in one of the Southeast's top submarkets for suburban development. FCP's Senior Vice President Alex Cathcart expressed excitement about the Mosaic Pooler project, noting the high quality of the development in a thriving area. This development is being spearheaded by Bayline Development, a company with considerable experience in this particular submarket. Additionally, the project is supported by the leading construction lender, Bank OZK, which is known for its focus on senior secured financing across various property types. The Mosaic Pooler development is set to provide much-needed market-rate housing within the Mosaic Town Center, a mixed-use master-planned community. This community promises abundant walkable amenities and excellent commuter connectivity, making it an attractive option for residents. FCP and Bayline have acknowledged the crucial role of Berkadia, Florida, specifically Scott Wadler and Jake Adani, in arranging this transaction. It's worth noting that FCP has a significant track record, having invested in or financed over $14.6 billion in gross asset value since its inception in 1999. They invest directly and with operating partners in both commercial and residential assets, utilizing both commingled discretionary funds and separate accounts. This approach has positioned FCP as a key player in major real estate markets across the United States. As we wrap up this episode, it's clear that strategic investments like these underscore the resilience and potential of the multifamily sector, even beyond Canadian borders. Such developments not only provide essential housing, but also bolster local economies and communities. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. See you on the next one.